From the floor of the CME Group, this is Danny Riley on this Wednesday, July 7th. You know, we're back into the slow-mo mode, and that has a lot to do with what's going on, both economically, also within the stock market, and with what people are doing over the summer. They're vacationing. They're not looking at this as much. Us, on the other hand, we people down on the trading floor, we don't have any choice but to look at it. It's in our face all day long. Now, what happened this morning was the S&P and Globex was lower. It was down about 7 handles at about 6:30 in the morning. But by the time we got to the trading floor here this morning, it opened 2 handles higher at the 1125, 1126 level. After that, the S&P shot up to the 1135 level, which is actually Tim from Top Notch's level, volume level, and it backed off a little bit and then popped up to the 4142 level, where this desk came out and said that they wanted to get short. Now the S&P sold off down to the 3675 level, and we are 3830 last, so it's not been a gigantic winner, but it has been a little bit of a trade for the guys that were taking it from the floor. You know, as far as the total volumes are concerned here, we came in with a little bit lower, a little lighter volumes than what we've been seeing. The average volume in Globex for the mini before the open has been around 400 to 450,000 a day over the last couple of weeks. This morning it came in about 325,000. Now, when you take out the 1.37, and when you take out the 320,000 done in Globex off the 1.37 million minis done so far, we've got about 1.1 million minis traded. You know, that's pretty much in line with what we would expect of a summer day. But here's the deal: the markets are firm. You know, we're up 14 handles here. We did have a trade that we recommended at the 41 and a half level to get short, and the market sold off. But it's holding in here, and it's holding in here pretty well. As far as the rest of the markets are on the floor, again, it's quiet all over the place. We're going to let Tim come in and give the technical side of what he's seeing here.
All right, Top Notch Trading stepping in right now on Wednesday here. Anyway, last week, of course, we were looking for that 1006 half level, and so far so good. Right now the markets are range bound, but the S&P now should see the 5270 level as its objective before we work back down on the lows anymore. So if they can get up there, they're going to find resistance right now. I don't expect today will be the day they get there, and I'm looking for the 46 to 47 area. If there's one more surge higher today, then we'll get back. It was surprisingly quiet yesterday, but I could find it funny that 3830 would be a high, and then they trade off 24 handles to test the settle prices on Friday, only to bounce back 10 handles. So did somebody say range bound? Yes, we are range bound. And I really think the correlation with the bonds is the play over and over, day after day right now. It just kind of looks like they trade tick for tick. So the last low yesterday in the bonds was 124.15 before they rallied. I put out if they can hold 124.15 again, they could reassert themselves, and so far so good. 24.15 is the low, excuse me, 127.15 is the low, and if I see a 127.27 bid, these two futures with the NASDAQ, the SPOO, will take make a move lower, and we could possibly see a retest of today's open. The fact that they opened at 25 to 26 today and never looked back and have rallied 16 handles is a testament of the range-bound idea. So until these bonds decide to make the move lower or the move to 27.27 bid, we will stay sideways with the action and the volume on the light side. Remains to be seen, but so far, nothing much. Like Danny said earlier, we're in a summer swoon, and if this market continues the same way, we're in for a long 2 months. See you tomorrow.